House prices have risen for the fourth month in a row, according to mortgage lender Halifax. Their data show that the house prices rose by 1.3%, to making the average price at £291,029 in January. Property prices are now growing at 2.5% annually, the highest yearly growth since last January, according to the lender's latest house price index. The time of recording this video is the 7th of February 2024. This article from Mortgage Strategy magazine has been published today, I would say about 15-20 minutes ago. As you can see, the 7th of February 2024. But it also confirms, even though the lender's report says that house prices have increased in certain areas of the country, homes in the southeast fell the most last month across the country, selling for an average of £379,000 and £220, which is 2.3% lower than a year ago. Obviously, London retains the top spot for the highest average house price in the UK. So an average house price, what they're saying here, is £529,000 and £528, although prices in the capital have slipped by 0.4% on an annual basis. 2024 has seen a positive start for the housing market. The recent reduction of mortgage rates from lenders as competition picks up, alongside fading inflationary pressures and a still resilient labour market, has contributed to increased confidence amongst buyers and sellers. However, whilst housing activity has increased over recent months, interest rates remain elevated compared to the historic lows we've seen in recent years, and demand does continue to exceed supply. Have a look at this fact. For those looking to buy a first home, the average deposit raised is now £53,414, around 19% of the purchase price. So it's not surprising that 63% of new buyers getting a foot on the ladder are now buying in joint names. So what they're saying here with that quote is, on a single income, it's difficult to get a property that a lot of people aspire to want. Whereas when you've got a joint income, you use your joint income to get the mortgage loan that you want, because people in reality are finding it very difficult to buy the property that they want on a single income. Because remember, like, residential mortgages are based on household income. Your household income minus expenditure is what's going to determine how much you can borrow from the bank, including your credit scores and other factors as well. But those main things are what determine how much you can borrow from the mortgage lender. This is a great quote. Stable interest rates, a reduction in mortgage rates, and less than half the inflation of last year have combined to persuade buyers that now is the time to buy. Now, let me elaborate further and give you my opinion on this. Basically, what's happened is when the rates will go up, people were hesitant to buy because they weren't sure, when the market was going to stabilize. A lot of times they couldn't even afford the monthly mortgage payment, even though, for example, they could potentially get the mortgage loan from the bank. Now, people have waited so long, they've just become sick and tired. There's only so long that someone can wait to move. So if you're a first-time buyer, you may want to get on the property ladder, but if you're living at home with parents, you might wait. But if you've got a family and you need a bigger space, for example, there comes a point where you just have to go for it. Now, with the mortgage rates stabilizing, so we've seen a lot of reductions recently, as of today's date, which is December, February 2024. Some lenders have slightly increased it because the swap rates have gone up, but we've seen the market stabilize. Now, what's happening is people who have waited so long are just saying, you know what, we're going for it. We want that home because the rates have come down to a level that they can afford the monthly payment. And this way, it's more of a buyer's market now anyway. So it's gone from a seller's market to a buyer's market where they're getting choice of property. They're not being rushed like when the stamp duty holidays were on, that everyone was just buying properties. People were making offers without even going into the property. This way, even though the rates are slightly higher, it's a buyer's market. They're able to take their time on the decision if they want the property or not. But secondly, they can negotiate on the price of the property. It's very rare in today's market that someone is actually paying asking price for a property. So there are good deals to be had if people are in the position to actually proceed and get a mortgage. So let me know your thoughts on this in the comments below. Let me know what part of the country you're in. Are house prices going up in your part of the country? Are you looking at buying now? Are you waiting? Are you waiting for rates to drop even further before you pounce onto the property market? Let me know in the comments.